Hey guys, welcome back. In this video, we're going to break it down in detail, looking for the historic analysis of all Tesla events in the last 10 years. Pre-event, post-event Tesla announcement to show you exactly how you can put some highly profitable trades today, tomorrow, and over the course of the next 72 hours, trading Tesla options, short-term expirations. Now, with that said, guys, in the last few videos, we made some predictions about the market drop, about how to trade the Federal Reserve announcement. And guys, if you're taking those, you know you've made a ton of money. And if you didn't, and you were just standing on the sidelines watching, make sure you don't miss out on this simple trade that could be executed even if you are a brand new trader to options and things like that. So, with that said, grab pen and paper, take some notes, guys. Let's go. Now, the key historical data we're going to take a look at is October 2nd, 2011. Model S revealed chart price action analysis leading to the event and post-event. February 9th, 2012, Model X prototype revealed. June 22nd, 2012, Model S delivery event. October 9th, Tesla unveils semi-autonomous autopilot. March 31st, 2016, Tesla unveils Model 3 prototype. July 20, 2016, Musk reveals Tesla Master Plan Part 2. November 16, 2017, Tesla unveils Tesla semi-truck concept and Roadster. November 21st, 2019, Tesla unveils Tesla Cybertruck. So all of these are the events that are similar to the event that Tesla is going to announce at about 5 p.m. So about an hour post market close today on September 22nd, 2020. So by analyzing this data, guys, we're going to show you exactly the most profitable time frame to actually stay in your trade and give you a couple of ideas how to actually stay profitable over the course of the 72 hours from the announcement time. So far at the time we're recording this, okay, important to point out, today is September 22nd, 2020. About lunchtime, the stock is already down about anywhere from 21 to 26 bucks. It's been fluctuating, so keep that in mind as we're going through the chart analysis. Now, most of the traders are highly mistaken. They spend so much time figuring out, oh, what is it going to be? Oh man, is Tesla going to announce this battery that's going to go 1,000 miles without needing to be charged? Guys, the stock is priced as if it was a lifetime battery that never needed to be charged ever again. This stock is, the current levels is at the fucking moon. Okay, so for those of you that are highly bullish, good luck, buy a shitload of calls, okay? But that's not what we do here at 13 Market Moves, guys. We short the damn bounces. And this is one of the greatest opportunities that this stock is going to give us one more time. Guys, if you don't believe me, go watch the last video we did on Tesla. When Tesla was trading at 517 bucks, we told you it was going to be under 420 within 5 days, and sure it was. Damn it, it was under 420 the next 2 days. And that was a highly profitable trade for those that took it. You guys know how it is. So don't miss out on this one right here. But the most important thing I want to bring to your attention is we're trying to teach you some concepts here when it comes to day trading, short trading, guys. It's not the announcement that matters, right? It's not how many miles the freaking battery goes. It's none of these bullshit, okay? The most important thing that you can analyze as a day trader is not the actual announcement, but focus on the reaction to the announcement. That's what's going to make you money as a day trader. So that's why we're going to take the time and analyze the events for the last 10 years in Tesla. Not from the standpoint of what was the announcement about, not how exciting it was, not how futuristic or promising it was, but rather how did the actual market react to the announcement. And by observing the reaction to similar circumstances, we're going to be able to nail this next Tesla trade. Guys, we teach you all of this stuff in the charts divergence course and chart patterns recognition. So if you haven't made charts your best friends yet, make sure you click the link below. Take advantage of this course right now. Now, so focus on this. Trade the market reaction, not the actual event. So many brand new traders are so focused on the damn event, analyzing the actual event and what could happen at the event. Okay, they missed the whole damn point. It's not the event. It's the reaction to the event, and trading the reaction is what actually makes you money. Now, with that said, let's move on to the first historic data point we've got is October 2nd, 2011, Model S reveal event type situation. So what we've got is a situation we call short the bounce, okay, the next day for 2 days, meaning this is what the stock is doing the day going into the announcement. The next day it bounces slightly higher, and then it actually goes lower for 2 days in a row. Yes, the announcement is great. It's beautiful. It's fucking awesome, okay? But guess what? The stock drops. Drops for 2 days in a row. They do buy the dip ultimately on the second day after the announcement. After that, the stock shoots higher for multiple days in a row. That's also as important if you're trying to put what we call the holy grails of all trades, and that is the round trade, where first you buy puts and then you follow up by nailing the bottom and you buy the calls. Now, we've shown you how to do that on multiple live trading videos, taking 3K to 60K, 4K to 100K plus, whatever. If you haven't seen this, make sure, okay, you click the link below, go to 13marketmoves.com, put your email, you can participate in watching all those videos and learn some great stuff about day trading and swing trading. Now, next event right here, we got February 9, 2012, Model X prototype reveal, the fallen reaction of the market. Was it an awesome day? Sure, it was beautiful. However, watch what happens the next day. The stock drops. So it doesn't necessarily drop pre-market, or it doesn't drop at the open, but it does stage a rather substantial drop after the stock opens. And notice, in this case, they buy the dip the day after the announcement. So the easiest trade in the last two cases I've shown you, no matter where the stock opens, what do? You buy puts because it will drop intraday. So for this, from the standpoint of taking a short time frame type trade on Tesla, no matter where it opens, you short the hell out of it, okay? Don't buy puts way out of the money, or split the strikes, or split the expirations. Guys, I'm going to show you. We speak a lot about that kind of stuff in our courses and multiple videos that we've posted on this channel. This is not the focus of this video, so I just want you to really focus on what is the probability of the stock dropping after the announcement. And so in this particular case, this is the second case where, despite of where the stock opens the following morning, which would be tomorrow, September the 23rd, it still has plenty of room to drop. Now, historic event number 3, June 22nd, 2012, the stock runs up substantially into the announcement of Model S event, and look what happens. It actually stages a big sell-off prior to the day of the announcement. The day of the announcement, they actually buy it up, and look, it actually bounces the following day, and then it drops, and it gaps down. Okay, so this is basically a 48-hour time frame where the stock continuously goes lower, stalls out, and goes lower even more. So in this particular case, this circumstance is similar to the current circumstance that we've got. The stock has been running up from the mid 300s all the way to this 430, 420 level, and so there is some definite similarity that gives us a high probability of the stock potentially bouncing and then dropping. But after reviewing all this data on all these meaningful events for Tesla, I'm going to actually draw a conclusion that should be highly helpful as far as you guys being able to put on the trade. And I'm going to do my best to actually upload this video to YouTube before the day is over, before 4 p.m. today on September 22nd. So with that said, this is what we've got. We've got a situation in 2012 where it pops and then drops. Now notice, it's the next day after the announcement. This is highly consistent. This is the first chart I'm showing you, and it's the same thing. No matter where it opens, it goes lower the day after the announcement is made. So if you're looking from a standpoint of a short-term type trade, you short it in the morning, you collect the gains on the drop, okay, and in some events, like on this chart, it actually continues to drop lower, so you can short it in the bounce and collect more profits the day after. Now here's the next event, which is the 2014 autopilot event. Similar circumstance to the current environment where the stock runs up going into the announcement. And then what happens is it stalls out when the announcement is made, and you got a gap down followed by another gap down. And considering on the longer time frame chart, I don't have a picture of it here, but for those of you students of the market, guys, you can actually schedule a 20-minute coaching call with a senior trader. They'll walk you through it. This is actually the perfect match right here to the current circumstances. So we got about a 55% probability that Tesla stock will actually open with a gap down tomorrow on September 23rd, irrespective of where it closes today. So you can wait till like 3:55 p.m., 3:59 p.m. to put on the trade. You would be buying puts in the expectation of a gap down. Now, don't put your whole account in this type of trade. You would know if you've taken all of our courses, you talk to a senior trader here, you never want to do that. However, stair step, meaning allocating some of your account towards this type of trade, considering all the historic analysis I'm pointing to you, could be a highly lucrative trade. Now, the options are overpriced because apparently the market is expecting a huge move. Based on all these charts, you can see that this type of events that Tesla does, they do stage a rather substantial move for the stock, with the exception of one instance out of all these events where the stock basically stalls. We're going to get to that in a minute. But overall, guys, understand that the highest probability match that we've got right now in 2020, September 22nd, is a match to the October 9th, 2014 autopilot event, in which case the stock drops 2 days in a row. So if we were to pick a high probability outcome out of all of these charts that I'm showing you right here, it would be this type of scenario where the stock runs up, it slightly sells off the day of the event, but the next day it gaps down, and it gaps down the next day again. So the highly lucrative trade would be holding on to your puts for 2 days in a row, cashing out intraday on the second day after the announcement, which would be September the 24th. This would be your ideal exit out of the trade. And then it stalls out and proceeds lower slightly, but at this point, if you hold these puts for 3 days longer, clearly they're not going to gain a lot more traction because of the time decay. Next match, March 31st, Model S prototype event. What happens is the same thing, guys. It is a 100% match, no matter which historic analysis you actually look at here, and it's unanimous that the day the stock opens, no matter where it opens, if it opens up or down, it will drop the day after the announcement intraday, ultimately hitting the lowest point of the day, and then it doesn't necessarily have to finish at the lowest point of the day. It will ultimately bounce, but we're pretty much guaranteed, no matter whether it's a black candle, white candle, red candle, that the stock will open. It will go lower. So for a day trade, it's almost 100% probability type trade when Tesla opens tomorrow, irrespective of whether it opens higher, lower. You short the damn thing, it drops, you collect the gains. It's very, very simple. Okay, next time frame, 2016, July 20th, master plan, part 2. Okay, here it is. We got a pop and a drop. So basically short the bounce the next day, guys. It's another scenario where the stock doesn't really do anything, but from the standpoint, from the time frame where it opens, it does drop intraday. Not the perfect match where you want to short the stock, utilizing put options. It drops, you collect the gains. It's a very, very highly consistent pattern. Now look at this one, guys. It's the same thing. And now we're in 2017. Tesla announces semi-truck and roadster event. And initially the stock pops higher. Then it drops, finishes close to the lows of the day. And then it gaps down the next day. That gives you a huge move, guys. This gives you a huge move to profit on the stock. 2 days in a row. So the ideal thing is, where do you want to enter? You want to enter when the stock opens tomorrow. You want to sit on the trade for 2 days. You basically get out on September 24th, intraday, at the lows, okay? And then you can reverse the trade onto the bull side. So in most of those instances, you cannot go wrong after the 2-day drop in Tesla. You cannot go wrong, with the exception of maybe one instance here in these charts, reversing your position into calls. But from the standpoint of trading weekly options, you want to short the bounce first. You want to sit on it at least that day, cash out at the intraday lows, or wait for the second day, next day, gap down again, and cash out at the lowest point of the second day. Now let's take a look at the Cybertruck event. Okay, this is another event that has a very similar composition on the chart to the current conditions where the stock definitely runs up going into the event. This basically resembles the highest point on the chart, and then the stock gaps down, finishes lower. In this case, it doesn't gap down the next day, but the probability is the same on the day after the announcement. The stock, no matter where it opens, it will go lower from the point where it opens. So we got basically analyzing all of these charts, guys. There's a 100% match of, despite whether the stock gaps up higher or gaps down, it will go lower the following day after the announcement is made after hours. Now, at that point, you got to be very careful if you want to reverse the trade and turn it into a round trip type trade, because in a lot of instances, in 55% of the instances here of the historical analysis, the stock will continue lower the second day before it bottoms and before it begins or attempts to go higher. So far, now, this is what we've got. And so we've got a lot of action where the stock drops, they pick it up in the expectation of a move higher. So this resembles a lot of cases like the 2014, like the 2017, but we know what happens in both of those instances. The stock actually drops 2 days in a row after the announcement. So we're to take actually a close look at the weekly chart of Tesla. Now, this is before the better event today. The stock currently trades at 424.88 at the moment I'm recording this. The stock is down about 17 bucks. And we clearly got a divergence as the stock attempts to move higher. The RSI is dropping sharply. We've got a potential for a death hook formation right here, which could result in a death cross over the course of the next couple of days. So this does not look bullish by no means. We got a really nice setup, and analyzing the historic trends, the stock is so much above the ones, you know, the blue line and the orange line. There's definitely just a ton of room for a huge size pullback. And if you're to ask me, well, how far can the stock actually drop over the course of the next 48 hours, guys? I know it could sound ridiculous, especially if you're a Tesla bull, but guess what? It also sounded ridiculous to you Tesla bulls when I said short the hell out of this thing when the stock was at 517 right after the stock split, and before you knew it, it was down to 350, 360 level. Okay, within next 72 hours after that. So don't miss these crazy opportunities. There's nothing wrong with being a Tesla bull, but damn it, as a trader, you want to be able to profit from both directions. You make more money when stuff drops, and most of the traders, they're so confused about it, they don't understand how to make money when stuff drops. So if you don't, okay, then clearly that is the reason why you're not putting trades like we show on this channel. Like the Tesla trade I've shown you, 8,000 to 150,000. You know, when we analyzed the Tesla last time when it was popping and dropping. So go and watch that live video because you're missing some crazy trading opportunities if you don't short the stocks on bounces. This is a perfect environment to do so. So with that said, 365 is where the stock can actually drop. Let me pull up the daily chart. So from 308 all the way to 461, we made a call to short Tesla at 517 and hit a low of 308, guys. I mean, the stock almost got slashed in half. I'm surprised if you're a Tesla bull, you still fucking got your account there. As many people has made fun of me trying to short Tesla. Jesus Christ, the shit gets slashed in half. Okay, show me your calls on Tesla. Show me how the fuck you're making the money, because I can show you how I'm making the money on shorting this, and I promise you I'm making a lot more than any of your bulls combined out there buying calls. So with that said, the chart of Tesla points to a drop to 355, 365 area within the next 48 to 72 hours, because we can easily repeat what happened in 2014 since this is the closest match. We can get a gap down tomorrow and another gap down the following day. Expect a huge sell-off on strong volume. But with that said, there is one aspect to consider. Elon Musk comes out and starts talking shit before the Tesla battery event even begins. So why would he be doing that? Because typically, historically speaking, okay, there's always all kinds of hype going into the Tesla event. And this time, he tries to downplay as if he's trying to bring the expectations lower. So this is the only concern, that instead of actually gapping down, we can initially bounce, which is awesome, because if we bounce, Okay, that makes the options cheaper tomorrow morning, so your percentage gains are going to be way, way greater. So with that said, stock bounces to 430 to 440 level. You want to buy 430, 400 level puts on any bounce tomorrow morning, because based on the historical data of all Tesla events, there's never been an instance where Tesla opened higher the day after the announcement and continued moving higher the next day. There's a 100% match that irrespective of where it opens the next day, it freaking drops. So, guys, if you're still not sure how to put this Tesla trade together, if you'd like to learn the 13 markets move formula and help you trade like a rock star, guys, make sure you schedule a 20-minute free coaching trading call right now. Click the link below this video. Damn it, it's about time you did so. Visit 13marketmoves.com to watch all the live trading videos we put together. Guys, take action now. This Tesla trade is too damn easy not to take advantage of today. I've guys shown you the recipe. Okay, all you gotta do is take the freaking action. If you got any questions about how to actually put this trade together, make sure you schedule this 20-minute coaching call. Get these questions answered. Let's roll. I'll catch you on the next trade soon.
Trading wins and losses is just like everything else in life that is worth fighting for. Do you remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business, thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house, thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit. But you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 market moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time, fearlessly using the 13 market moves formula today.